The stock market pre-investment tips they won't give you. The stock market may look like the world's biggest roulette machine. But unless you treat it that way, trading is not gambling. It's just another career that requires knowledge, experience, and discipline to succeed at. In order to start, you should be aware of the following. Spend extra time learning if you are losing the majority of your trades. How do you read a chart? Support and resistance in the supply and demand equation. Indicators, the price action, management of risk. To improve as a trader, stay patient and do not stop investing in yourself. Let's get started. 1. If a stock is deemed to be cheap, there is a rationale for it. Value traps can emerge in stocks that initially appear to be attractive values. For instance, Leapfrog provided instructional electronics that were safe for young children before tablets became commonplace. Investors should be wary of offers that seem too good to be true because similar pitfalls are out there. 2. Become relaxed by doing nothing. As Warren Buffett put it, the stock market is a device which transfers money from the impatient to the patient. More effort generally results in more progress? But studies have shown that increased activity actually results in worse returns when it comes to investing. One of those traits that can make all the difference is patience and doing nothing. Because we sometimes struggle to time market movements, the success rate of market timers is actually quite low. Even the so-called pros have a dismal history. That's precisely how markets work. There are numerous factors that affect how it moves. For instance, a lot of its actions are dictated by market psychology. Many of its decisions are also influenced by interest rates and world events. The list continues forever. The key idea here is that predicting these factors is challenging enough. 3. Prioritize risk rather than profit. Instead of concentrating on increasing your profits, try to reduce your losses. Why should we focus more on profit when we enter a trade when we believe it will result in some profit? Only when you have performed your profit estimates do you engage in a trade. Your focus after entering the transaction should be on limiting the loss if it does. Acknowledging that trading goes against human nature and conduct. The truth is that nobody can be completely correct when trading. You will therefore make mistakes from time to time, and the goal is to minimize your losses. Instead of holding on to unrealistic expectations, you should swiftly close the transaction out to reduce your losses. Even though it's extremely uncomfortable, it's always the right move. According to a concept known as the risk-reward ratio, if your risk is X, then your profit should at least be X too. While more seasoned traders aim for higher leverage ratios, newbies should stick to 1 to 2 whenever possible. 4. Knowledge and experience is the key. Learning patience is a difficult talent to master. However, you will grow more patient as an investor as you gain knowledge and experience. Never feel compelled to make an investment because your money was sitting. I pressured myself to make financial decisions too rapidly in the beginning of my investing career, which is a formula for disaster. Early on I wish I knew that. I also know now that every year, the market experiences a correction during which it decreases by up to 10%. There has always been a 10% or greater crash every 10 years. Yeah, you do not wish to wait around indefinitely, you might not realize all the benefits. But, I always saving at least 50% of my money sitting and waiting in case of a crash. The stock market crisis did indeed occur in March 2020. I bought some stocks and options because I had some extra money to invest. These were for sale large cap corporations. As a result, since the market recovered, my investments have multiplied tenfold. This is a fantastic illustration of what may occur when you exercise patience in the stock market. I see a market fall as a chance to get great firms' stocks for less money. 5. Understanding it's a real job. There are significant lifestyle benefits to trading. You get to establish your own schedule, work from home, and be your own boss. This is the primary draw of day trading stocks for most people. Unfortunately, most visuals and advertisements fail to communicate the obvious truth that this is a genuine profession. Marketers enjoy pitching the trade fantasy. They display images of snoozing in, lounging on the beach, and driving fast cars. When you are an effective trader, you can accomplish all of these things. But it's crucial to keep in mind that those are the outcomes of success, not the ones who brought it about. The key to trading success is maintaining discipline. It originates from someone who is passionate about working from home and having independence. Trading stocks is a serious endeavor. It's a terrific idea to think of day trading stocks as employment that you'll love if you enjoy the methods involved. Add structure and discipline to your trading so that you can stay in it for the long run. Any promotion that implies day trading stocks can lead to a stress-free existence should be ignored. 6. Education is key. We really need to get this. There is a wide range of education among the traders who appear on their displays. Some have graduated from high school, while others have attended college. Some of them may have even earned PhD. Day trading stocks is exciting since you start from scratch. Whatever education you have when you enter doesn't matter. To trade well, you still need to learn a completely new set of skills. Regardless of how smart you are in other areas, it is best to adopt a humble attitude and approach the markets from a different angle. You can dismiss any worries that trading requires a specific level of education. Years of formal schooling are not as effective as pure dedication to learning. Spend more time learning than you do trading. How then can you begin day trading stocks in a profitable manner? There is a sophisticated way to guarantee that you pick up knowledge quickly and maintain an edge in the day trading arena. Make sure that you concentrate on giving the learning aspect more effort than the actual act of trading. Keep in mind that you can handle that part if you can point and click with a mouse or tap on a screen. Accelerating your learning is more significant than anything else. 7. Investing versus trading. Have you ever wondered what separates investing from trading? Which is more secure? It's a crucial query, and the best response will put a stop to any internal conflict. Many traders, like myself, think that trading and investing are interchangeable terms. Just the time frame is different. Trading accelerates the outcomes. They are slower after investing. There are benefits to each choice, but none is more safe or risky than the other. The timing is the only real distinction between day trading and investing. Trading has the benefit of accelerating the time it takes to know your results. A terrible deal is obvious right away, whereas a bad investment may take years to reveal its true colors. In this manner, investing occasionally serves to mask incompetence. Because of this, I favor trading. I like to monitor the effectiveness of my strategy now rather than in 5 or 10 years. Keep in mind your temporal advantage when day trading equities. You quickly learn whether your plan of action is successful or not. Additionally, if you decide to invest, you can apply the skills you developed while trading to increase your chances of long-term success. 8. Psychology will always dominate. Psychology. This is the aspect of trading that most novice day traders undervalue. Bad psychology can never be defeated by great strategy. You can use and find trading approaches and tactics. Each trader needs to develop their own wholesome and optimistic trading attitude. However, there is a simpler method available than working alone. There are lots of coaches and training programs that can aid you in your journey. No matter how you approach psychology, keep in mind that you must invest the necessary time to learn it. 9. Love your work more than money, the money will come. Trade for love rather than money. Sound contentious to you? Yes, I do concur. Consider this, though. Many would-be great traders fall short because they prioritize making money over trading. Either they are failing to meet their expectations, or the money isn't always there immediately away. Embrace trading for the sake of trading. Make sure you enjoy trading as an easy fix for this. When you love something, you remain present in the moment. If you enjoy trading, you will continue doing it whether you win or lose. In due course, the earnings will come. Make sure to foster delight of the actual act of trading. Your route to success will seem considerably shorter in this manner. 10. Lastly, start small. When I first started trading, I had the mentality that if I invested more money into a transaction, which would include buying more than one, my profit would seem better, and I could quickly develop a tiny account. This drove me to go all in on my trades, which backfired. Humans are emotional creatures, and when our money is at stake, we become even more so, appearing helpless and vulnerable, which causes us to make even more foolish judgments. When you trade small, and considerably differently when you trade all in, emotions change. When I have undertaken a deal with a lot of money, I can hear and feel my heart pounding blood through every vein in my body. Sometimes finding myself up late at night, this could only mean you invested way too much. When you start small, you are less likely to suffer significant losses, and you have more control over your emotions, which will aid you in making the best trading choices. The lesson is to start modest if you are new to trading and not to approach it with the expectation of quickly doubling your capital. Until next time, trade safe. www.trinitymoneyclub.com